Well, good morning, Southern Oregon. It's Alice Lema here with my good buddy, Pete Belcastro, here with the radio show for Real Estate Radio Show. We are live in Southern Oregon talking about all things real estate. And we are both brokers at Southern Oregon offices of John L. Scott Real Estate. Pete, it's been a really interesting week here in Southern Oregon for housing. What has been going on in your world?
Well, first of all, I want to say, hey, it's the 4th of July this weekend. So hopefully people are out enjoying whatever their celebrations there are. There aren't a lot of, not a lot of them around. We don't have, the parades and the fireworks and all the things that we're used to. But the weather's really nice. So hopefully people will go out and enjoy the holiday. Because it's, there's a lot of people around, Alice. There's a lot of tourists in town. Even though there's no Shakespeare, things like that. There's a lot of people here, so activity is going on in real estate. It amazes me. We just continue to go along. We're selling things. They're not being replaced with new listings. We've been talking about that for several months now. So anyway, and part of that reason is because of interest rates that are hovering around 3%. Don't you? That's got to be the biggest driving force that there is right now.
It's really, really interesting. We have many, many more buyers than we were expecting this year. The interest rates being lower are bringing out all the renters, the people that want to move up to bigger houses. It's bringing in a lot of what we call investors, people adding second homes and people adding apartment buildings and such.
Where are they coming from? What are they doing? And why are they coming here? Where are they coming from? And all those questions are out there, but it's still the interest rates that are driving everything. And that's why today's show is going to be so interesting, because Guy Giles, who's, our resident mortgage expert from Mutual of Omaha Mortgage, is here, along with the area manager, Michael Ronchette. And we're going to find out what in the world is still going on with these interest rates. Should we expect them to be this way, you think, for a while longer? What products are out there? What should buyers expect now when they go to get a loan? Because there's certainly, they're out there, and the buyers are certainly there, Alice. The biggest problem is not enough choice now.
Yeah, that is really a problem.
Especially in certain price ranges.
Yeah, so it's going to be a great show. Do not touch that dial and keep your mask on, because even if you're out in public, Governor Brown said this week, she wants us to wear our masks. So stay tuned. We'll be right back after these quick commercial breaks. Don't touch that dial. Well, welcome back, Southern Oregon. Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott here in Southern Oregon, and you're listening to The Real Estate Show, our one and only weekly broadcast of all things real estate here in our local valley. And you can also catch a repeat of this show tomorrow at 6 p.m. on KCMX News Talk Radio 880. So you can listen to it again if you like. We're here with a really exciting show. We've got Guy Giles and the area manager, both from Mutual of Omaha Mortgage. And Guy Giles is our resident lender, always here every month to give us an update on what's going on in the market, especially with the corona. So welcome, Michael, and welcome, Guy.
Hey, thank you very much. It's definitely been pretty crazy as far as this whole thing goes. We're having people, for this area anyway, migrate out of the Bay Area. I've probably had 12 or 13 buyers since we did our last show, all from the San Francisco Bay Area. It seems like, I don't know if they were just treated worse during this whole thing or it was just time, but I'm getting a ton of people out of the Bay Area at this point.
I think Pete and I are getting a lot of relocators as well.
Guy, before I should say that, are they fleeing because of the situation in California? Are they buying homes here, or are they literally relocating to the area?
They're for the most part relocating. People are finding out. I have one from Facebook yesterday, and I've had, oh my gosh, just everybody's figuring out that they can actually work remote, and they're getting permission to do it long term. Mm-hmm. That's really the main thing. I have one of my buddies that we actually got his house about 4 or 5 months ago that does a lot for one of the TV stations, the big networks, and he always had to be in LA to to tape those no matter what. And now they're actually letting him do them remotely, which is something he never thought would happen. He had bought a second home here just because he liked it, and now he's here full time.
And are they looking at buying generally rural properties, or are they buying residential properties in the communities?
Both, actually. Yeah. I mean, the two that I just referred to were both buying rural properties, but I think it's mainly just getting out of the big city, but there is a drive to be able to be a little bit independent at this point. So that's on a lot of people's minds also. Hopefully they realize that they need a good agent to work with for that, because there's septics and other things to think about that you may have never thought about in a big city.
Well, and every area is different. Even if you're in real property in another part of the United States, it's different. It's very, very local. The geological issues are different. So we'd like to welcome Michael Ronchette from Mutual of Omaha Mortgage. He's the area manager up in Seattle, Washington. Welcome, Michael. Tell us what's going up in your area.
Much like what Guy talked about, it's, we are seeing a lot of movement with real estate right now. We're seeing a lot of folks leave the city and move to more of the suburb areas in and around the Seattle area. A lot of movement to the, into the Woodinville areas and the outlying communities. Not quite super rural per se, but I think to the point the guy was making earlier too, with the environment we're in right now, people are learning to work through remote locations and using technology and the different types of things. And businesses, I think, have really learned to reshape the way they do things. And it's no longer the brick and mortars. It's working from home and using the technology that we have. And it really is changing where people are looking for homes. And we're seeing it even up in Seattle, very similar.
One problem that we're facing here when we go out into rural areas, you may not face that up in the Seattle area, but as people are working remotely, the issue comes up about internet access. And let me tell you, when you're up some of these valleys where these beautiful properties are, there's not much access in there. And so that's a real concern as we go forward here, is that what kind of access, internet access, can people have in these properties to work remotely from home, because not every place is equal by any means.
No, and again, while there's satellite internet, it obviously is not like it is when you're plugged in and working remote. But I think that we're going to start seeing the development going on and as things push out, and folks, as we learn, they find a way. And which we all have had to do over the last 90 days, 120 days.
Yeah.
So, Michael, I was curious, because you're in the Seattle area and we hear so many news reports about some of the issues up in all big cities, but we get a lot of the Seattle updates. I'm just curious, has that had any effect on your mortgage business? Are you getting more calls, less calls? What do you think is the side effect of all that up there?
Yeah, it's a great question. And really, we haven't. If anything, from a volume standpoint, because of the fact that a lot of the volume that we tend to look at, because in the inner cities themselves, it's more of a different marketplace. It's more of a jumbo market for folks, and more bank presence, I think, will tend to do in those areas. But we really have not seen any sort of impact whatsoever in either the buying. And of course, we also tend to see things that are in a specific area that have nothing to do with 95% of the rest of the area. And that's where we're really seeing all that volume taking place. And if anything, we've seen an increase over the last 60 days.
Really? Wow. Wow. That's kind of a surprise, don't you think, Pete?
Well, but we've seen the same thing too here. We're seeing pending sales, that are over 100 each week now in Jackson County. So that's been going on for almost a month now. So right. I think the same thing is happening here as there. There's just but Michael's right, and Guy's probably the same thing. It's not general everywhere. It's in certain locations, certain pockets, and certain prices that are really the driving force of it, I would say.
So are you noticing prices going up in your Seattle area?
You know, what we're seeing in certain areas, again, in Seattle itself, we're actually seeing prices probably stabilizing. In areas outside of Seattle, pushing up through Everett, out to Woodinville, and down in the Puyallup and South End areas, we're seeing prices rising. And
Mm-hmm.
they were always at lower price points to begin with. But I would say those houses between the 300 to 600,000 range, which is the predominance of it, we're seeing increases. Folks in that jumbo area, we're kind of seeing a stabilizing for that high-end home, but we're really seeing a good increase in that 300 to 600,000 range, and with the rates being so low right now, buying power is up, and that's also contributing because we're also starting to see those multiple offers again due to light inventory overall. And we're seeing things going for, 10-15% over asking.
Yeah, we're having similar situations here, even though our average prices are a little bit lower. And I'm wondering, Guy, are you having anybody come and talk to you about trying to do multi-generational families? Because I know Pete and I are getting we're getting from Seattle and the Bay Area, and they want to have bigger houses because they want their relatives to live with them.
Yeah, I mean, I've seen that for years actually, where they want a couple houses actually on a property, but they are definitely, I think people are realizing as this stuff is going on that family is the most important thing other than God at the end of the day. And it is, it's important to be close to them. So that, out of everything, even though people want to get to a smaller town, people want to, just feel a little bit more secure. Definitely getting close to family, and usually there's some kind of a tie to this area that they have. And yeah, absolutely, as far as getting houses where you can, I had a mother-daughter in here the other day. This week I've had a couple other people, yes, as far as moving into a little bit bigger house where you can just stick a whole bunch of people into it. It's not a bad idea.
In case you get quarantined again.
Yeah, that could be good or bad. I can't imagine being in a little townhouse in San Francisco for $3,500 a month, which is what I hear a lot lately. This really high rents for pretty much nothing. Getting stuck in there for, at least I can go out and mess around with a horse or work in my garden or do some things outdoors at my house. And people just don't have that ability. So I think that this market is just going to keep getting crazier and crazier here, because as soon as people can move and start looking at houses, even though I just had a record month, and I know we have in our whole region, at least for the lending side, it's just going to get busier and busier. We're not slowing down on the lending. We're still doing 3% down conventional, and if you have a good credit score,
wow,
the mortgage insurance went up a tiny bit, but it really didn't go up a lot. And you're seeing people be able to get into a house about what they're renting for. And I mean, the closing that I was at yesterday, a gal that works for the school district bought her first house. And by the time you factor in the tax breaks, she actually did have mortgage insurance on this one. She could write that off, all the benefits, plus you have an asset that's appreciating. Anyway, if you're a first time home buyer or moving, it's probably a good time to jump, or selling for that matter.
Well, Pete, you've got some stats from this week, and we've got 3 counties that we're tracking every week now, because we're actively watching Klamath County as well as Jackson and Josephine County. So what are you seeing as far as the statistics are?
Well, I know we've got a break coming up, but one of them is, this is the second week in a row now, and Michael touched on it about what that price range was up in the Northwest, up in Seattle area, that 300,000 to 600,000. For us here, it's up to 350, and then we go above that, it changes. This is the second week in a row now in Jackson County. We had like 63 closings, and again, half of them, Alice, are above that price range.
Wow, that's a high price for our area.
It is. And so in fact, our median price is up to 380 last week. So what that tells me is that people are because the interest rates are so low, they're able to buy a larger, more property. Because we've not seen that here. I mean, it kind of divides at that line. It's the second row now that we've seen that half the sales roughly have been above that 350,000 range, where there is a little more inventory also to choose from versus below that price range, where that's why we're getting multiple offers. And so, you know, that's kind of the way that is right now.
Mm-hmm. Well, and
I've
the other,
actually seen, oh, I'm sorry. I've
no,
seen
go ahead.
quite a few people, because our rates are so good here at Mutual of Omaha, where their purchase power is up $15,000, which can make a big difference, especially in the lower price ranges, just because our, you know, our rates are really good. And I've had them come in with a quote, and by the time we get done pricing them out, apples to apples, they can buy more of a house for the same payment. So it's
Well,
been
and that's how you can see the prices are going up, but their payments are kind of the same. Plus, there's, like Pete said, there's a lot more to choose from in those higher price points. So I see a lot of people just biting the bullet and saying, let's spend a little bit more money because we'll actually get a house versus we're going to have to keep slugging it out with all these other people. So we got a break coming up. Alice Lema, Pete Belcastro, The Real Estate Show, here with Guy Giles and Michael Ronchette of Mutual of Omaha Mortgage. Do not touch that dial. Keep your mask on. Keep listening. We've got great information. So we'll be right back after these messages. Manager from Seattle, Michael Ronchette. And just a quick reminder, we've got a YouTube site, Real Estate Show Southern Oregon. You can see 11 years of our radio shows on there. Really, really great content. Getting back to the conversation with Michael and Guy Giles of Mutual Omaha Mortgage, we're talking about some of the changes post-corona and some of the loan programs that are coming out. So why don't you bring us up to date, guys?
You know, I think one of the best things that we're seeing, and really this has just been going down over the last 2-3 weeks, is that, you know, when COVID hit and really sent shockwaves through all the markets, we lost a lot of just the regular standard vanilla products. It wasn't just the crazy things. It was even impacting a lot of folks' ability that maybe had some credit criteria issues or opportunities that they had to overcome. What we've seen recently is the markets have settled. We've seen a lot of the products coming back that were lost. And I'm not talking, again, about the crazy things. I'm talking about folks that, you know, in the past would have had no concerns whatsoever of getting a loan. And now those products are coming back. So the good news is we're seeing the ability to get folks qualified for that. There was a moment of lapse that they were either finding it hard or getting a rate that was, you know, that they could afford to get and be able to buy a home. Now with rates coming back or coming down considerably, you know, we're in the selling of the marketplace, we're seeing those folks being able to now get loans again. Which is a good sign coming into the, you know, the coming weeks and for the summer and the buying season.
One of the things you said earlier was jumbo. So when we're talking a jumbo loan, around here it's anything over $510,000 for your actual loan amount, and that was one of the markets that really got hit hard as far as just there wasn't an appetite, because anything under $510,000, Fannie Mae and Freddie Mac are allowed to buy. And, you know, unless you're in an area that's a high balance, we don't have to get into that because that doesn't really apply to us down here. But because it's a bank loan, just one that's kept by them, they kind of have control where the rates are. They don't necessarily fluctuate with everybody else. And a lot of the jumbo rates, the loans over for $510,000, really went up. They've come back some, but they're not quite back to where they were pre-COVID. So that is one of the changes if you're going to get a higher loan. So we look a lot of times at doing maybe a second mortgage behind it, and then that way that still keeps your regular loan under that conforming amount. But anyway, they can talk to one of us and we can come up with a plan. But there are some workarounds, but that pricing has not really come back yet, like our regular stuff in the 30s.
It's getting better, and that's the good news. Is as every day it seems like we're progressing and we're getting everything settling back in, and we're also starting to see in that jumbo section that Guy's talking about. We're also starting to see some of the non-traditional credit programs starting to come back, which are all great signs that we're getting back to a normal.
I'm just kind of thinking about this, like if you drive around the car lots, there's no cars on the lots. There's no Sea-Doos at Waterworld. I think people are going to have to go back and replace all these items that everybody wasn't able to manufacture. So there is a sense of optimism that, as soon as we can get a handle on this a little bit, as soon as there's some kind of I don't know if you could ever cure a virus, but if, once we can get a little bit back to normal, that it should come back quick, especially with some of the tax things that we have for small businesses in place right now anyway. So I think that's probably why we're seeing, some of the lending standards that really, a few of the just, kind of brokered type things fell off the map for a little while, but you're starting to see them come back in, and you're still seeing the rates good, and you're starting to see the other stuff because people always will need a house. And I think even though there are a lot of unemployed people right now, and it's sad that there still are a lot of employed people, and, and I don't know. I just think we could turn this thing around as quick as it got ugly.
Well, when you guys talk about changing lending standards kind of thing here, that's concerning somewhat. I saw a daytime TV ad that pronounced by one of these online lenders, which, by the way, are awful and you should never use. Because
ditto.
Yeah,
just like an online real estate agent that's out of the area working for 0.5%.
Oh,
I hear about those all the time.
Oh, I'm not the horror stories of agents on this. Do not use an online lender, but they're also on there promoting no income verification. Is that possible? I thought you couldn't do that anymore. What would you guys do in that situation?
Charge them about 9% or to 12.
Well,
they're probably talking about a bank statement loan or something like that, and those absolutely went away, but they're starting to creep back a little bit. But I don't know what they're talking about because I didn't see the ad. But historically, people that were self-employed, that made a good income, everybody knew they made a good income, but they didn't really show it on paper because who likes to pay for people to make dumb policies where our tax dollars go. I'm sorry, I said I wouldn't get political, but anyway, when it's all
glad you're not doing that. I mean, that's really good though. So what rates are you giving people this last week or so since we've last talked to you? I mean, what can you expect today if I'm sitting there thinking, I got to get pre-approved to do this? Where are we at right now?
Figuring a decent FICO score, if you're not really paying points, 3.1, 3%, if you're looking at these online guys and they're quoting the rates, the one that starts with Q and all that, they're always quoting points, and it's between 1 or 2 points. So that's one thing to be careful of. If you're looking at a daytime TV ad and somebody's quoting, hey, no income, no assets, that's not really going to work for a W-2 person, at least in my experience. And it's the same thing with the rates, kind of what the big print giveth, the little print taketh away. So if you're seeing rates lower than, 3.1, 3% right in there, you're probably paying points to have that rate. Every day it's a little bit different. The mortgage-backed securities trade a little bit different than a lot of the typical things. So, I mean, it's really on a FICO score. There's about 26 things that go into quoting an accurate one. So I think that you could, I don't know, I don't know what you guys are seeing up there, Mike, but that seems to be about where we are right now.
No, very similar. And I love the phrase regarding the fine print, because usually that's the one thing that you talk about a lot of the radio or TV ads and things you kind of hear on those 30-second spots. It's always about the fine print that will come into play typically when an application comes in. And aside from saying a VA IRRRL being done, most other things have a catch. And we're rate-wise, we're seeing about the same.
Yeah, I mean, and historically, you can get a pretty good rate, walking into your local bank or going to Chase or one of those big guys like that. Even though historically they haven't been great at closing on time, they offer pretty good rates. I'm actually seeing their rates a lot higher than ours right now, just as a rule, because they don't have the capacity to close loans, so they're artificially raising them up a little bit to slow down some of their volume, I think. But we're still closing on time, and actually we didn't have a wire go out last night. I always admit my good and my bad, but other than that, we're still able to close fast, and we're closing clean.
So did I understand you to just say that there are lenders that are dragging their feet because they're not dealing with the volume of their workload? Is that what you
Yeah,
just said?
we call it elasticity, and at least that's the best term I ever heard for it. And if you have too much volume and you know that you can't close your loans on time, you might as well raise the rates up a little bit. That'll slow people down from applying, and you make more money on each deal at that point, just because there's just not capacities to handle the kind of volume that are out there right now.
I did not know there was such a practice in the lending industry of raising your rates to slow down the volume of your business. That's counterintuitive.
I have not seen it here. Well, it's not really, because if you can't close loans, then you're just paying for lock extensions, and it ends up costing you a lot more to originate those loans than it originally should have. So it's a little deeper.
It tends to be a practice that you tend to see more with the big banks because of the economy of scale that they're dealing with. But to give you kind of a perspective of what the industry as a whole is looking at on the refinance side of things, the industry went into the year thinking that they were going to do $1.5 trillion and basically staff for that. There's 7 trillion qualified refinances in the marketplace right now because of where rates are. So that shows you, to Guy's point about elasticity, and why some of the big banks have made the strategic move of raising rates to slow the volume.
7 trillion in refinancing in the hopper right now.
That would be qualified with a rate decrease over where they currently are in servicing.
Basically, yeah, that it would make sense for them to do it. So, as long as the rates don't go up, these refinances are going to happen for a while.
Well, and that's probably slowing down people putting their houses on the market, don't you think, Pete? That if people can refinance and stay where they are, that might be affecting our inventory?
Well, what's happening is that right now, I'm just looking at it from our meeting this week, and Giles Scott from the National Association of Realtors, the typical mortgage payment is now lower than the median rent payment. It crossed that.
Wow.
That's the first time that's happened since I guess 2016. It looks like. So think about that. We always talk about if you rent versus buying, and this statistic shows that now that average or typical mortgage payment of $1,077 is now a lower than the typical rent payment. So that's amazing.
So that's why we have so many buyers. We really, really want to make a call out to sellers or potential sellers. If you're listening or you know somebody who is part of your little family and friends group, anybody wants to move, please put your house on the market. Call somebody, call us, call anybody, but we really need more homes to sell.
And that's part of the reason why NAR stats again show that during the month of May, which concluded a while ago now, over a month ago, the average across America received 2.7 offers per sale. That's the average across the country.
So multiple offers became the norm during May, which we were still shut down during the pandemic. And it's what you and I were talking about, Pete. We've got a break coming up. We're going to talk more about the corona, the effect on the real estate market, what's going on up in Seattle with area manager Michael Ronchette from Mutual of Omaha Mortgage, Guy Giles, our resident lender from Mutual of Omaha Mortgage. Don't touch that dial. We'll be right back with the Real Estate Show. Alice and Pete, don't go away. Well, welcome back, real estate fans, to the Real Estate Show. I'm here with Pete Belcastro. I'm Alice Lema. We're both brokers at John L. Scott Real Estate, Southern Oregon. And just want to remind you to check out our website, realestateshowOregon.com. We have lots and lots of great content there on YouTube, lots of good education to help you be a good, smart consumer when you're out doing real estate transactions. We're here talking with Michael Ronchette, Mutual of Omaha Mortgage, and Guy Giles of Mutual of Omaha Mortgage. And Michael, we were just talking a little bit with Pete about how we've just passed a threshold of mortgage payments versus rental payments. Did you have something you wanted to comment on that?
No, in hearing that from Pete, it just goes to reinforce one, it's buying a home is still the best investment. And right now, there's no better time to buy when, with rates as low, with buying power up, as Guy talked about, to move out of the rental property and look for a home. It's no better time to do that all around, from the investment side, from just owning a home. And I think at the same time with COVID, with everybody having to stay at home recently, it's an unprecedented time. And I think that's what's going to be driving people out as inventory goes up. And for folks that are in a home, it's a great time to list and buy up with the where rates are currently.
I have a client that we were talking just about getting ready to do this. He's got a home, he's got to sell, he wants to move up and buy one. I go, you're like in the most perfect position I've ever seen a buyer or a seller in my life, in 13 years of doing this, because as the seller, you're going to sell the place because you're in a certain price range. You've got this, it's a nice place, we're getting multiple offers, you're going to sell it quickly. And as a buyer, you're going to get an interest rate around 3%. My goodness, how perfect is that right now for you to do it? The biggest problem is going to be finding the replacement property to go to.
Yeah,
right?
and you really need a good strategy for that. And you need more than one strategy, because you can really capitalize, Pete, like you just said, on the selling part if you can go park yourself at somebody else's house on their couch or RV or an apartment.
Let me ask Guy and Michael this question, because Mutual of Omaha had that cross-collateralization loan where you could buy before you sold.
The bridge loan, we were calling it. Yeah.
Is that still out there? Is that still there? Because I'm telling you, for some buyers, that's a godsend if you have enough, equity in your home to sell.
There is a bridge lending that was halted that's starting to come back in. It's different qualifications that we're seeing those. So they're not as easy as they used to be to get, but they are coming back in. And that's one of the things that we're starting to see over these last couple of weeks start to get back into the marketplace. And
that would be a good look. I would like that. Guy knows I call Guy about that all the time.
Oh, I know. So it's all your out-of-state borrowers that were always fun with those ones, but but it has actually worked out pretty well for some people. But
It really.
Selling your house, coming out with a good down payment for your next one, that just helps you to go into it right. If it's something that you decide that you want to keep, even if you haven't had that house rented out, we can, we can give you credit for rent for your house, and that might help you qualify for your move up one if you just are dead set against selling it. But I think giving one of these guys, Pete and Alice, a call about selling your house, at least find out what it's worth. It doesn't hurt, because I think you might be surprised right now. Things are really going up.
You think prices are rising out of this?
Yeah, and I think that's going to, as things loosen up, it's just going to accelerate, because right now, yeah, you can do a little bit of a video tour, but there's most of the country, especially the people that have historically moved here, are pretty locked down right now. And you're not going to have the constraints of school. I think a lot of people are going to go back to school online, so you're not going to have that, hey, everything shuts down in September when kids go back to school. People working remote, I think it's just going to accelerate, especially moving to an area like this. So, you might want to jump on it.
I agree. I think the Medford area as a whole is primed for continued rise in house prices.
See, we don't want that to happen, and that's really the problem here, is that we don't have the economic base. And what happens, we're going to be gentrify ourselves out, and the locals are going to be pushed out. It's happened in so many cities. And if what you guys are saying occurs here, that's what's going to happen here. And so those things, we're very concerned about that and how much housing, available housing do we have. Alice, this is what we talked about for how long now? This exact problem that we're facing, that they're bringing up, you see, as lenders, what they're seeing. And
what I would love to see,
we go to double digits again in price rises where we were not that long ago, then, you know, boy, it's going to really change our whole valley again.
well, if there's somebody smarter than me, which that's mostly everybody, could figure out something, I have an idea where it could solve a lot of this. We already talked about people working from home. A lot of the brick and mortar buildings probably won't get filled back up just because, you know, just because people will be working from home. I would think that it would be pretty cheap to buy some of this if it could somehow get zoned into some multifamily residence. A lot of the stuff along Jackson Street, places like that, where you could turn it into some multi-unit properties. So here's my $1 million idea for somebody that could figure out how. If you could figure out the earthquake stuff, turn them into some multi-family units and fill those places up and come up with some cheaper places for people to be.
And, you know, along that line, I like that thinking, and a little less dramatic zoning change would just be to expand the mixed use. And what mixed use means is that you can have a business building, an industrial building, and live on the premises. So if you could buy a warehouse and live in the back and rent out the front, just, you know, and maybe we should talk to our building and zoning people here in Southern Oregon about perhaps expanding that, because then people could live on site and still work from their business. The word that starts with a B that we don't have very much of right now, business.
Yeah.
Well, here we are, the 4th of July weekend. Two big things coming up now before we run out of time. Okay, we're going to have, you know, we got a drought here, and we're going to be stocking water shortly. We're going to have lots of issues with wells going dry. People are going to have to face some of that stuff who've never faced those before. So that's going to affect rural properties, especially in certain areas where the wells are subject to this type of thing. And, you know, that's out there. And what happens with school in the fall is going to also, I think, dictate part of our market. But overall, don't you think the next July and August, I think they're going to be really busy, just like what we're seeing. I don't think it's going to slow down one bit. The issue is prices. They've got to hopefully stay stable.
But I think the water situation is more dramatic up in Klamath County than it is down here. Historically, they have more issues up there than we do down here. So, but, you know, whenever we do have a dry year, we do have to watch and we have to be careful. But our weather is pretty unpredictable here too. So we could end up with a wet spell. So don't want to get everybody in a panic just yet, but we do want to forewarn you that we are headed that way possibly.
I'm going to remind you of that when we do our Labor Day show, okay? When
I'm happy to be wrong. I love making predictions. I'm happy to be wrong.
No water, then we're going to have to do it.
Yeah. Well, it's been a delight, gentlemen. Thank you so much for your time. We love having you on. Michael Ronchette and Guy Giles from Mutual of Omaha Mortgage. Thank you so much for sharing your time and your expertise with us. Pete Belcastro and I will be back next Saturday on KCMX News Talk 880 AM at 10 o'clock. And then also you can catch a repeat of this show tomorrow at 6 p.m. So thank you. Have a beautiful, beautiful Southern Oregon 4th of July. Stay safe. Keep your mask handy in case the governor walks by, and have a wonderful weekend. Bye.